Welcome to the video summary series for Padisco's financial accounting textbook. In addition to chapter summary videos such as this one, financial accounting also offers podcasts, virtual tutor e-learning, homework activities with anti-cheat and auto-grade functionality, and detailed instructor resources. Find out more at padisco.com/finac. For now, over to the author.
Hi again, I'm Rachel White and welcome to the next summary in the Padisco accounting series. This one covers special journals and subsidiary ledgers, starting with an introduction to special journals and subsidiary ledgers, followed by the sales cycle, the sales journal and cash receipts journal, the purchases cycle, the purchases journal and cash payments journal, and finally, using the general journal with special journals and subsidiary ledgers. Let's begin by finding out what exactly are special journals and subsidiary ledgers. Up to now, we've used the general journal and general ledger to record transactions. However, when businesses engage in a large number of similar transactions, it may be more efficient to record these transactions in a journal dedicated to this task. These journals are known as special journals. Today, we'll cover 4 main types of special journals: the sales journal, cash receipts journal, purchases journal, and the cash payments journal. As well as special journals, a business may also keep control accounts and subsidiary ledgers. A control account is a general ledger account that summarises the information contained in its related subsidiary ledger. A subsidiary ledger is an accounting record that stores the details summarised in the related control account. The thing to remember is that subsidiary ledgers are not part of the general ledger. They are separate records that exist to free the general ledger from excessive detail and to keep an up-to-date balance on each separate subsidiary ledger account. So the information detailed in subsidiary ledgers needs to also be recorded in the general ledger as well. Now, one way to remember the difference between these items is to recall that journals are like a diary of the business. When a business uses special journals, it is like the business has several diaries, each used to record a particular type of engagement or transaction. On the other hand, ledgers are like a filing cabinet with the individual folders inside each drawer representing a specific account. Some of these accounts, like accounts receivable and accounts payable, have many transactions entered into them. Think of these transactions as a piece of paper in the account folder. If we tried to record all of the transactions into the one account, it would get so full of information that there may be information overload. It would also be very difficult to sort through the papers to work out, for example, how much a particular customer owes us. So, instead of having a separate account in the general ledger for each individual customer or supplier, this detail is kept in a separate record called a subsidiary ledger. The subsidiary ledger is like a separate filing cabinet outside the general ledger that contains one folder representing one account for each customer or supplier of the business. If we add together the account balance of each folder contained within the subsidiary ledger, the balance is equal to the balance of the related control account in the general ledger. So that is how the subsidiary and general ledgers are related. Now that we have introduced special journals and subsidiary ledgers, let's talk about 2 special journals that feature in the sales cycle, the sales journal and the cash receipts journal. The sales cycle generally consists of selling goods on credit and then collecting cash from customers at a later date. Businesses that engage in a large number of these transactions on a regular basis use 2 special journals to record these transactions more efficiently. The sales journal is used to record sales of inventory on credit, while the cash receipts journal is used to record transactions involving a receipt of cash, including cash sales, collections from customers, or the receipt of a loan or interest from a bank. Now, since this is a summary, we do not have time to go through how to journalise and post transactions using each special journal. I'll illustrate this at the end with the cash payments journal. However, you can find each of the special journals detailed in the Padisco textbook, including the different transaction types that can be recorded in each journal, as well as what information is to be posted and when. We have just learned that the sales cycle uses 2 special journals. Next, we learn that the purchases cycle also has 2 special journals, the purchases journal and the cash payments journal. In the purchases cycle, goods are purchased on credit and paid at a later date. The purchases journal is a special journal in which credit transactions are recorded. This may be a single-purpose purchaser's journal dedicated to record the purchase of, say, inventory, or it may be a multi-purpose purchaser's journal that records all types of credit purchases. The cash payments journal is where all cash payments are recorded, including the payments made for goods purchased on credit. Let's now use the cash payments journal to illustrate recording a transaction in special journals. To record the cash payment to a supplier, first, the date of the transaction is recorded in the date column. Next, the name of the account debited is recorded in the account debited column. In this case, it is the name of the supplier we are paying. However, if the debit other accounts column is used, the name of the other account must be specified in this column. If the payment has been made by cheque, the cheque number is then entered into the cheque number column. We will skip the post-ref column for the moment and record the amount of the cash payment in both the debit accounts payable column and in the credit cash column. The thing to note about recording transactions in special journals is that for efficiency, each transaction is only entered into one line. To do this, special journals have columns dedicated to particular accounts to save writing out each account name for every transaction. Once we've recorded the transaction in the special journal, the next thing to do is to work out if part of the transaction needs to be posted immediately or if it will be posted at the end of the accounting period. Any transaction that involves a subsidiary ledger account is to be posted to the subsidiary ledger on a daily basis. In addition, any amount that is entered into an other account column is to be posted to that specified account daily. In this case, the amount recorded in the debit accounts payable column is to be posted immediately to the supplier's account in the accounts payable subsidiary ledger. Once this posting has been completed, the account number for that supplier is entered in the post-ref column in the cash payments journal. You can think of the post-ref column as recording the posting reference for amounts posted to the ledgers on a daily basis. At the end of the accounting period, when all of the transactions have been entered into the special journals, the total of each column is calculated and recorded in the total row at the bottom of the special journal. The sum of the debits totals should be checked that they equal the sum of the credit totals. The totals of each column are then posted to the relevant accounts in the general ledger. Just watch out though, the total of the other accounts column is not posted because the amounts in that column have already been posted individually on a daily basis. An X is recorded in the post-reference row to indicate that this total is not posted. After posting the rest of the column totals, the account numbers of the general ledger accounts are recorded in the post-reference row of the special journal. In this way, the post-reference row is used to record the reference for amounts posted to the general ledgers at the end of the accounting period. We have just briefly explained using special journals and subsidiary ledgers. However, the best way to learn how to use these is to practice using them, which is where your Padisco e-workbook can help. You'll find many questions for you to practice, such as this one, where the totals of the sales journal is to be posted to the general ledger accounts. We can fill in the answers in the first general ledger account and record the post reference in the sales journal. Then, select the account name and fill in the answers in the second general ledger account. Again recording the post reference in the sales journal. Once we submit that, we now get personalised feedback for our answers and an explanation for the question. Now that we've looked at the purchaser cycle, we finish on a quick note about using the general journal with special journals and subsidiary ledgers. Even though a business uses special journals, there are still transactions that are unable to be recorded in them, such as the sales return. These transactions are recorded in the general journal. Now remember, if a transaction involves both a control and a subsidiary account, such as in a purchase return transaction, both accounts must be identified in the general journal entry and the amount must be posted to both the control account in the general ledger as well as the subsidiary account in the subsidiary ledger. So that's Chapter 7, Special Journals and Subsidiary Ledgers. The key topics were special journals and subsidiary ledgers, sales cycle, sales journal and cash receipts journal, purchaser's cycle, purchaser's journal and cash payments journal, the general journal with special journals.